Some of the world's poorest people are having to repay the richest nations and banks billions of dollars in interest every single year. Can these institutions in New York and London be persuaded to simply cancel those loans? Hello and welcome to Roundtable. I'm Enda Brady. Now, governments in Ghana, Somalia, Sudan and Zimbabwe are struggling to provide their people with basic services like healthcare and education. One big reason, much of their revenues goes towards repaying international lenders. So just how did these countries end up in this situation and what can be done about it?
People in Ghana's capital, Accra, late last year protesting against the toughest economic conditions they've seen.
The average Ghanaian can't afford a 3 square meal. This is very, very dangerous to the whole country. We have kids among the age of 14, 15 who are now taking people's belongings just to survive.
Ghana is not alone in suffering a cost of living crisis brought on by soaring inflation, but it is among a growing number of low-income countries that has also had to deal with crushing debt repayments.
Ghana
is grappling with both high inflation and a steep increase in the price of maize, a staple food, which has more than doubled compared to the last 5 years. The country is burdened with high debt and a significant depreciation of its currency, inevitably causing imports, especially food imports, to become more expensive. This challenging economic situation is amplified by Ghana, can also be observed in other countries like Sierra Leone, Liberia and Nigeria.
Ghana is one of 39 countries that the World Bank says are either at high risk of being unable to fulfill their financial obligations or are already in what it calls debt distress. The majority are in Africa, with a handful of others in Asia. One of the main contributors to this crisis? Interest rates, which central banks in the developed world have pushed sharply higher over the last few years to rein in surging post-pandemic inflation. Countries that had borrowed heavily while interest rates were low are now facing significantly larger repayments. According to the World Bank, developing countries spent a record $443.5 billion to service their debts in 2022, scarce resources that could have been spent on health, education and the environment. And that figure is expected to surge by 39% over this year for the world's 24 poorest countries. So who has been lending all of this money? Multilateral institutions like the International Monetary Fund and World Bank have traditionally been the go-to bodies for countries in need. But lately it's been big banks in New York and London that low-income countries have been turning to, in part because they impose fewer conditions on their loans than the IMF. Another major lender to low-income countries has been China. It has poured hundreds of billions of dollars into giant infrastructure projects across Asia and Africa, like this railway project in Kenya over the last decade, part of what it calls its Belt and Road Initiative. Some borrowers of Chinese loans have struggled to repay their debts.
A lot of those countries are now facing debt distress. They're probably less likely to want to take on big loans.
A growing chorus of voices is saying that big lenders to poorer countries should simply cancel their debts in order to help vulnerable people. But can some of the most powerful institutions on the planet be persuaded to do so?
Well, let's meet our panel. Joining us from Ghana's capital, Accra, is Daniel Amateye Anim. He's a development economist and the executive director of Policy Initiative for Economic Development, which is a think tank. In Dakar, in Senegal, we find Daouda Sembene. He's CEO of AfriCatalyst, a global development advisory firm that works to overcome Africa's development challenges. And I'm delighted to say here with me in the studio is Hannah Ryder. She is CEO of Development Reimagined, an African-led development consultancy. You're all very welcome to Roundtable. Daniel, I'll come to you first of all, as we've just been hearing in our report there about Ghana. Just spell out for us the kind of challenges you're seeing on the ground as a result of your country's debt.
Yeah, thank you very much. In recent times, we've been experiencing a very high debt stock, and that has distorted our macroeconomic environment. We've gotten to a stage where government is struggling to meet repayment obligations, hence the need to engage multilateral as well as bilateral partners in terms of debt restructuring, not only with the external creditors, but we started with domestic debt restructuring. What it means is that people's investment, pensioners' investment have to be postponed because government has gotten to a level where we couldn't meet repayment obligations as and when they fall due because of physical challenges. And as a result, government is unable to execute certain infrastructure development outlined in the budget in terms of road construction. The government had a very progressive policy in respect of pursuing a very formidable educational system that will support industry. That is free SHS. We succeeded by having accessibility. In other words, a lot of people have been enrolled, but the challenge has to do with providing the necessary infrastructure that will support learning and teaching and learning. We are struggling because government have to use almost all the money that we get from revenue mobilization as well as the receipts that we get from exportation, etc., to meet debt obligation.
Let's bring in Daouda. I just want to snapshot, Daouda, of Senegal, what you're seeing. Just spell out the state of play with debt in Senegal.
Well, thank you very much and for having us. Maybe actually I would start by, from an African perspective, by saying that debt per se is conventional and a traditional financing instrument that every country uses to achieve their government objectives. It's good for Africa, for advanced economies, for emerging market, and for developing countries. I think what Daniel said, and that actually applies to Ghana, also applies to Senegal and many other African countries, was that at the onset of the pandemic, there was, of course, much sort of fast build-up of debt in around Africa, but also around the world. And my take is, I think that's per se is not bad. The fact that actually debt has been resorted to achieve some objective is not necessarily bad. What is bad? Because of course, when you look at it from a global perspective, you have seen countries with over 100% of debt to GDP ratio. Even Japan, for instance, at the onset of the pandemic, actually achieved something like 260% of GDP. So this is not necessarily bad. What is bad, and I think that's the problem with many African countries, is that debt is extremely expensive when it comes to African countries. The cost of borrowing is very prohibitive. And what it means is, of course, what we have seen over the past 10 years is African countries have seen their interest payment increase by over 130%, which is twice more than other developing countries. Why? Because, of course, the cost of borrowing is very high in there. And this has implications. This year, for instance, it is estimated that African countries collectively will be servicing their debt in the amount of almost $90 billion, which is a lot of money that is going to be diverted away from other priorities, whether it is spending on education, spending on health, spending on infrastructure. All of that is, of course, the result of high debt. Right now, it is estimated that about 21 African countries are either in debt distress or facing risk of debt distress. What it means is those countries, unfortunately, will be mobilizing the scarce resources they have to service their debt instead of investing in education and social sectors, as I indicated earlier. This is the issue, and I think this is really the main issue that needs to be debated. How African countries, when they're facing shocks like the COVID or the Ukraine crisis, can have timely access to affordable financing so that they don't have to build up debt and they do actually maintain their debt sustainable. I think that's the critical issue that we need to discuss.
Thanks, Daouda. Hannah, for every dollar that's spent servicing debt, that's money that's not going to children, healthcare, education, food, infrastructure. I mean, how do African countries get out of this cycle?
Absolutely. And I think what's interesting to note as well, the zooming out that Daouda did already, what's interesting to note about that is that if you look at the history of how debt to GDP ratios on the continent have changed, we are at about 1984 levels of debt to GDP ratios. Now, 1984 was the point at which we started to see a really large rise, and the issues like a really significant debt crisis occur and so on. And then there were lots of bailout programs, and then eventually in the 2000s, the Highly Indebted Poor Countries Initiative. We don't want to get at that point. And the question is, how can we learn from history? As you say, how can we avoid these sorts of problems? And I think if we have to remember one other aspect of this all, which is that even if you did reduce all of that spending right now, even if you were able to create a mechanism that would take all that servicing to zero, African countries would still need to get more debt because we're so behind in things like infrastructure and so on. So, a country like Ethiopia or Zambia, which have been going through some of these initiatives, just like Ghana, they need to be spending billions of US dollars a year just to build the basic levels of infrastructure. And if they're not doing that, then that's going to be bad for citizens. So it's what didn't happen last time was a change in the overall structure of the international financial system. And I think that's what people are thinking about and working out. If we are going to do something different, then it's the change to the international financial system.
So here's a question, Hannah. Why would they want to change the system when it benefits other countries outside of the continent of Africa? They're making profits off people's misery, aren't they?
Well, what happened last time was that it became an issue for African countries to solve, an issue for then, it was blamed on African countries spending badly and all this sort of thing, which is actually not true. And definitely we've seen many countries have spent very, very responsibly, especially over the last 2 decades. They've been spending on infrastructure. They've been really investing in improving the situation. What we need to do is then see, well, yes, of course, there are some organisations and some, especially private sector, we're talking about interest rates, for example. When countries like Ghana go to the market, they're spending they're having to borrow at 10% interest rates. Of course, that's not going to be sustainable. So if there's a way of increasing, of course, there are things like the IMF, the World Bank. These are organisations that are meant to be designed to support countries to have the cheapest type of financing. We've got to put more pressure on them.
Hannah, you mentioned debt initiatives. There have been several in the past. So the first was the establishment of the Paris Club in 1956. It is an informal group of 22 of the richest countries, including many major Western countries, as well as Russia, Japan and South Korea. In 1989, the then US Treasury Secretary Nicholas Brady launched a plan to resolve the Latin American debt crisis through the issuance of so-called Brady bonds. The IMF and the World Bank launched a heavily indebted poor countries initiative, which you just mentioned, in '96. That was to ensure that no poor nation faces unmanageable debt burdens. And in 2005, the IMF kicked off its multilateral debt relief initiative. More than 36 countries have benefited from that plan. Daniel, what would you like to see happen if you had a magic golden wand to wave away debt? Give us a couple of points. What could be done this year to help African countries with debt?
Yeah, thank you very much. I think the African bilateral and then multilateral partners need to appreciate and then understand one critical thing, that the need to support Africa equitably. They need to be very fair with the continent in terms of the global financial system, significantly where they position Africa, which I perceive it to be a deliberate architecture. And equally so, we also have our challenge. Where most of our governments are corrupt, they do not manage the resources that is available to the countries or to the various economies. So that is the question. But to answer your question, I'm of the view that they need to come to terms with the continent on a flexible means of paying, if possible, waive some of these interest rates on such loans. Because if you recall, if they don't do that, the challenge is that once the government are unable to provide the necessary opportunities within the economy to create jobs for the youth, they may resort. That's the reason which in recent time we have seen so many productive young men and women who wanted to cross the Mediterranean to Europe. If you don't support the continent to create a sustainable job for the citizens, they may resort to unorthodox means of entering into Europe, which is another challenge in terms of migration-related issues.
Daouda, that's a very interesting point Daniel touched upon there, migration, movement of people into Europe. I mean, a lot of European governments are pretty obsessed with this, and yet the same people aren't joining up the dots and realising that if they could just help African countries reduce their debt burden, they might not see these big waves of migration that they seem so paranoid about. Is that a fair assessment?
Well, I would say that the migration, fragility, pandemics, climate change, all of those are issues that are not one region's or continent's responsibility. It's the global responsibility. It is a global challenge that needs to be addressed with global solution. Africa has a role to play. The international community has a role to play. If we do it well, I think those issues would be addressed. So just to answer your question, if some countries, like I said earlier, are facing heavy debt burden in Africa, of course, the way to help them actually address it so that they actually also have enough resources to allocate to migration, to combat migration, or at least illegal migration, would be to allow them to restore their fiscal base. What does it mean? Is to allow them to actually renegotiate their debt in a way that actually reduces the debt service so that they can not only, of course, service their debt, but at the same time also allocate resources to other priorities. And how do you do so? You need to have a multilateral debt restructuring mechanism, like the common framework that the G20 has put in place, but which is not yet, unfortunately, delivering results for countries like Ghana or Ethiopia or Zambia. So that's one issue. But also we have to remember, I say this is 21 countries that are either in debt distress or facing a debt crisis. It means that there are 33 more countries that are not in that situation. We need to also address their situation. And how do you do so? You have to make sure that those countries have timely access to affordable financing from global financial markets, from global capital market. And this is not yet the case, as Anna said earlier. African countries, on average, borrow at more than 11% from global capital markets. That is at least 700 to 800 basis point more than actually the US benchmark, which is used usually in the markets. So we need to address that issue. We also, of course, have to recognize that African countries themselves have a role to play. It's up to them also to mobilize more domestic resources to address their needs, but it is also to them to make sure that they strengthen their policies and their regulation so that the situation that can lead to debt distress is not necessarily actually is addressed in an effective manner. And last but not least, we also need to make sure that African risk assessment is done in a way that is fair and just. There is some research that show that African countries are not assessed by credit rating agents in a fair manner, which means, of course, that it has a bearing on the cost of financing that they can expect from global markets. That's an issue that needs to be addressed. And I think we have seen people like Hannah and others actually voicing very much about these issues lately.
Thanks, Daouda. Hannah, I want to talk about one country that seems to have tentacles in every corner of the African continent, China.
A country I know well. I lived there for 6 years.
Well, tell me how they are profiting from Africa. Should we be concerned about the tentacles they have and the payback? You know, what's in it for the Chinese? They're very, very interested in Africa mineral resources as well.
Well, I think the whole world has been interested in African mineral resources. But before I answer your question, I think it's also important to think about, from an African perspective, why be interested in China as well? Why be interested in finance from China? And a lot of the time, many African leaders are, because they find financing from elsewhere either very expensive, as Daouda was explaining with regards to credit from the private sector, or they find it very difficult to extract. It takes almost years sometimes just to get 300 million from the World Bank or from one of the other regional development banks. It can take a really long time. Whereas the Chinese way of working has been much easier and simpler to be able to get those sorts of finances and deals.
Lower interest rates?
In some cases, yes. Certainly for the middle-income countries on the continent, they are lower than what those countries would be able to achieve with the banks like World Bank and IMF. The lowest income countries, they can't get that. They are going to be a bit more expensive. But in any case, the fact is, as I said, African countries need more finance. So that's why one of the reasons they look to China. But why is China interested? I think the other question is, why isn't everybody interested right now? And it kind of goes back to your question about migration. This is not an issue about, are Africans going to be, kind of enveloping Europe? This is a question of why not invest in the continent? Because this is a continent where it should be the world's largest manufacturing hub, taking over from China in that way. The African continent should be supporting all the production across the world of lots of goods, because we're going to have the biggest youth population. We have the workers, and other regions don't. The Chinese government has seen that. They know that that's the trend, and that's what they're investing into, that's what they're leaning into. And the question is, why isn't everybody else doing that? And I hope others will do that, to be honest. We've actually seen, overall, the foreign direct investment from Europe, US, even China as well, hasn't kept up with the pace of growth on the African continent. It's time that it does.
So tell me, you think the Chinese influence in Africa is overall positive? I mean, in terms, there's obviously a payback for China.
It's payback for Europe. It's payback. Everybody has got their interest. And I think it would be misleading to say that countries don't have a national interest. But I wouldn't necessarily say China's national interest is worse than Turkey's national interest, or worse than the US's or Europeans.
Countries.
Exactly.
Yeah.
Everyone does have their different national interests. But my view is that also African countries also have an interest. And at the moment, African countries have an interest in working with a wide range and diversifying partnerships. When they did rely on one partnership or two partnerships, it didn't work. And that's one lesson that is being addressed at the moment by African leaders, and they have been trying to do that over the past few years.
Thanks, Hannah. Daniel, would you like to see more countries then take an interest in investment in Africa instead of piling into debt bonds and profits and making money that, the cycle of debt that's gone on for so long just needs to come to an end? Do you think investment is the way forward?
Yes, certainly so. Investment is the way forward, but investment in the right spirit, investment where there will not be a deliberate encumbrances to ensure that at a certain time, the countries that, these countries countries that the investments will be done will not be crippled. Okay, so for example, just like Hannah indicated, yes, as much as I appreciate China's presence on the continent, but if you study the philosophical and economic ideology of the Chinese, why they are interested in Africa is because of our natural resources. They need it to drive their industrial agenda. Just like any other bloc is interested on the continent, okay, their key interest is to, at the end of the day, serve their larger interest rather than that of Africa. So it is incumbent on our leadership, our political leadership, to understand, so that when they are dealing with China, they are dealing with EU, they are dealing with the USA or any other bloc, they should be able to appreciate that they are not Father Christmas code. They are not in to support Africa against the score that Africa needs that support. They have an interest, a national interest to achieve.
Daouda, final question, just briefly, Daouda. Do you think in the coming years we will see the debt burden of African countries go down, or is it going to get even worse? What's your prediction?
I think we have to recognize something. I think how it's going to evolve is going to depend on how we are going to be successful in promoting good debts and containing bad debts. Bad debt is unfortunately a situation where nobody is going to win. Borrowers are going to lose, borrowing countries from Africa, but creditors also are going to lose, because if borrowers are not able to service their debt, they're not going to get any profit. But I think if we promote good debt, which means actually, the debt that could help sort of fasten growth in those countries, create jobs, but of course make sure that the government have enough resources to allocate to priority spending, then everyone everyone would win. The country, the borrower would be winning because they would be able to achieve their objective. The creditors, whether private or official, are going to also win because the borrowers would be able to service their debt and everyone would be happy. I think this is what is come to how we can really make a good job of making sure that countries are incentivized to go for the good debt and, of course, avoid the bad debt. It also depends also on how the global financial architecture is being reformed so that countries have timely access to affordable debt from multilateral development banks like the World Bank, the African Development Bank, and others. But they also, when they are facing debt sort of a crisis, which is of course unavoidable in some cases, we have seen it in many other regions around the world, when they face those situations, that they also have a quicker restructuring of their debt so that they can service and get back to track and be able to grow out of their debt.
Daouda, Daniel and Hannah, thank you all so much for your insights. Remember, you can see more discussion and debate on our YouTube channel. Search for Roundtable TRT World, and if you like what you see, please do hit that subscribe button. But for now, from me and Brady and all of the team here, goodbye and thank you for watching.